disconnecting and missing net.
Net. So hello learners, welcome to our session today. My name is CPA Aringo Frederick. In our session, we'll be handling public finance and taxation. It's just a continuation of what we were doing yesterday. And because a lot of you guys requested that we should continue that class today, so that's why we decided that we are going to set it up and continue that class. Remember, we are looking at capital allowance. That was our main topic of yesterday. We are talking of, we are looking at capital allowances. Capital allowances. And we mentioned several elements under capital allowances, which included types of capital allowances, So, in our class today, I want us to continue from where we stopped yesterday. And just a reminder on what we did, we noted that under capital allowances, basically, we'll be talking of main elements such as ID, we'll be talking of IBD, we'll be talking of WTA. So up to last class, we had talked of ID. So we introduced IBD and we mentioned something on IBD. But for the purpose of the class flowing well, I wish to redo IBD again so that at least all of us, we should be having that knowledge. And for those who are joining us, I really wish that you share with your colleagues, also for them to get this knowledge. The topic of capital allowance, remember, it has cut across CPA, Cifa, ATD. And when you are talking of CPA, it has cut across Section 2 and also Section 6. So if you are watching and you know a friend who is doing public finance and taxation, if it is either ATD, Cifa, CPA, Section 2 or Section 6, you can invite them so that they can also learn this aspect of capital allowance. And remember, we noted that this is very key because it's not only for the purpose of our examinations, but also for the purpose of us applying it in the practical world. Because right now we are heading to Junes. The final books of accounts are being prepared. The audited books, of course, they are being prepared and they'll have to be filed. So it's very ideal that and whenever you're preparing the drafts accounts, the concept of capital allowance will always be there when it comes to the practical point of it. So that's why I noted it is very important that we should learn the capital allowance and grasp it very well as it is required. So to continue with that, I've said I'm going to reintroduce IBD. We are going to reintroduce IBD. So that as at the end of the day, you should be having this knowledge very well. So talk of IBD. We noted, and this is what we noted, and you must mark it very clearly. We noted that at any given point, whenever we'll be talking of IBD, I'll be looking at deductions which are granted to investors on industrial buildings. Deductions which are granted to investors. We are talking of deductions granted to investors. Deductions granted to investors on industrial building. on industrial buildings. On industrial buildings. And please always note that, yes, the tax have been amended, but as I mentioned yesterday, the tax amendments that have been done this period will not affect us in our examination. Simply because if the exam is to be set, we are going to basically deal with the last year's tax. That is financial year, the last year, that is the last financial year, which ideally, for the purpose of exams, we normally talk of January to December. And the tax rates that were used last year are the same tax rates that we are going to use for the purpose of our examinations. So the amendment, like say for example, corporation tax, it has been amended, yes, to 25%. Initially it was 30%. So always note that we are not going to use the 25%, but instead we are going to use the 30% as it was. So mark that very careful. Mark that very careful. So we are saying that these are deductions granted to investors on industrial buildings. And whenever we'll be talking of industrial buildings, ideally I'll be looking at it into two perspectives. So in this case, you notice that for industrial buildings, if you can recall, whenever we'll be talking of industrial buildings, ideally for industrial buildings, I'll be looking at it into this case, into two forms. We are going to talk of the industrial building as they are, term them as industrial building. And we are going to talk of commercial buildings. We are going to talk of commercial buildings. You are going to talk of commercial buildings. So this is what you are going to talk about. Talk of industrial buildings and commercial buildings. So looking at these two cases, I gave you the examples of industrial buildings and also for commercial buildings. The same case I'm going to repeat. For industrial buildings, we noted, we'll be talking of buildings such as labor quarters or staff quarters. Labor quarters or staff quarters. We're also going to talk of showrooms. Not showrooms per se, but we are going to talk of what is known as a warehouse. Talk of a warehouse. Talk of a warehouse. Or at times, you can term them as godowns. You can also talk of staff clinic. Staff clinic. Staff clinic. We can also talk of sports pavilion. We can also talk of sports pavilions. Sports pavilion. So basically, these are under industrial buildings. These are under industrial buildings. What about commercial buildings, my good students? Whenever we'll be talking of commercial buildings, ideally, I'll be looking at these elements. Talk of showroom. We'll be talking of, number two, talk of admin block or offices. Talk of retail shops or canteen. So basically, this is what will comprise of commercial buildings. So in this case, you should notice that we have two areas. We have an area of industrial building and you have buildings known as commercial buildings. So this is what we mentioned yesterday. And what about if you're talking of the rates? The rates for industrial building will always be talking of 10%. And whenever we are talking of commercial building, the rate will always be at the rate of 25%. Will always be at the rate of 25%. So whenever we'll be computing the capital allowance for these buildings, for industrial building, ideally I'll always be talking of the 10%. And whenever we'll be talking of commercial building, ideally I'll be talking of at the rate of 25%. And also there's a very key element that you mentioned yesterday, that whenever you are dealing with IBD, you should never forget that concept. For those who are in our last, our yesterday's class, I believe you can recall, we noted IBD and we termed IBD as Mr. Date. We termed IBD as Mr. Date, Mr. Date. That is what we gave this IBD, the name of Mr. Date. And why are we saying that IBD is Mr. Date? This is the main reason why we are saying IBD is Mr. Date, which you should mark it very correctly. For us terming IBD as Mr. Date. We are terming IBD as Mr. Date simply because of this reason, talk of NB. Talk of NB. We are saying that IBD is Mr. Date because at any given point, whenever we will be providing capital allowance for assets under IBD, we are going to apportion the capital allowances as at when the asset was used in the firm. We are saying at any given point, whenever you want to provide capital allowance for any item under IBD, we are going to apportion the capital allowances as at when the asset was used in the firm. That's why you are seeing it is Mr. Date. Say, for example, like in this case, maybe you had constructed, say, a staff clinic, just an assumption, assuming you had constructed a staff clinic here. And for staff clinic, maybe you had a constructed staff clinic at 2 million shillings. And when did you construct this staff clinic? Assuming 1st July 2019. That is when you constructed the staff clinic. You are told to provide IBD for this staff clinic. You are told to provide IBD for this staff clinic. So if you are to provide IBD, my good students, this is what you are going to note. At this point, I know very well that staff clinic will fall under industrial building at the rate of 10%. So I'm going to take, yes, our 10%, which is very correct. We multiply by the qualifying cost. I gave you the concept of qualifying cost in our previous class. So times qualifying cost, which is 2 million. But the question is, this asset was in the firm for how long? This asset was in the firm for a period of from 1st July, assuming that our financial year was starting from January and ending in December. So it means that this asset was utilized for 6 months. So I should be having times 6 over 12, which in that case should give us a figure of roughly like 100,000 shillings. So if I was to provide IBD for this staff clinic for that period, we are going to say that the capital allowance, I should be having 100,000. Because remember also at this point, capital allowance are going to be taken as allowable expenses. They are going to reduce the value or figure that you're going to subject for tax purposes. Assuming the same case, that staff clinic, maybe I'm taking the same case, or you are given in this case, maybe you are dealing with, say, labor quarters. You are told that you had labor quarters. You are given labor quarters here. And you're told that, for example, these labor quarters, maybe it cost the company 1 million. And it was utilized from 1st March 2019. And we want to provide capital allowance on the same. We want to provide capital allowance on the same. In this case, you know very well that I'm dealing with labor quarters, which is at the rate of 10%. So providing IBD, providing the capital allowance for this item, I should be having the 10%, yes, times the qualifying cost, which is 1 million. Very correct. But the question is, this asset was in the firm for how long? This asset was in the firm from 1st March. Ikiwezekana nilisema jana unaweza hesabu na mkono. From March, April, May, June, July, August, September, October, November, December. So it was in the firm for 10 months. So I should be having 10 over 12. Of course, that should give me a figure of how much. I should be having a figure of, that is 10%. So I should be having 100,000. Should be having 100,000 times 10 over 12 times 10 over 12. That should give us a figure of roughly like 83,333. So you should be having a figure of like 83,333. So that should give us the capital allowance for that period. And that is the concept of Mr. Date, why we are terming IBD as Mr. Date, because the date factor, this was July, and this was March. You'll find that the date factor will affect our computation of IBD. The date factor will affect the computation of our IBD. So the moment you've noted like that, now it will be very simple for us to compute IBD, keeping in mind the concept of Mr. Date at the back of your mind. Keeping in mind the concept of Mr. Date. So after you've seen this concept, now a good student will ask, Mwalimu, then how will we proceed, or how am I going to prepare the IBD schedule? How will we come up with the IBD to establish the total amount of IBD to be charged in that company for a certain period? So that should take us to the format of working out IBD. The format of working out IBD. And this is what you are going to have. The format of working out IBD. This is what you are going to have. So that at any given point, whenever you find IBD question, it will be very easy for you to work it out. It will be very easy for you to work it out. So that should take us to the format of IBD. Format of IBD. So we do have a format of IBD. So I'm having format of IBD. Format of IBD. So looking at the format of IBD, I want you to concentrate here very well and compare it with what we did under ID. So looking at the format of IBD, this is what we are going to have. I'm going to have the nature of the building. Nature of the building. We're going to have the nature of the building at that point. We are going to have the qualifying cost. We are going to have the IBD, or rather, we are going to have the qualifying cost. Then before IBD, you are talking of balance brought down. Then you are going to have IBD. Then, of course, you are going to have the balance carried down. So that should give us the format for IBD. So that in the event that you are talking of assuming I'm having staff or labor quarters. So assuming I'm having labor quarters here, I do have labor quarters. So in that case, I should be having my cost there. In the event that probably it has been brought down, in the event that probably I'm having the balance of these labor quarters as at the beginning of the period, I will have it here. But in the case that we don't have the written down value as at the beginning of the period, meaning that at this point you won't be having anything. So you should be having our figure there, the 10% of labor quotas, because this is 10%. So you should be having the 10% of the qualifying cost. What you are going to have under IBD should be the 10% of the qualifying cost. So that as at the end of the day, talking of balance carried down, I should be having in this case, because it's the same as what you have as at the beginning. So I'm having the qualifying cost minus IBD. That should give us our balance carried down at that point. What about another element? Talk of staff clinic. The same procedure will apply. Qualifying cost. In the event, or we're assuming that we had staff clinic written down value as at the beginning of the period, I will have that figure here. Suppose we had balance brought down as at the start of the period, I'll be having that figure there. Let me mark it with a red pen so that you understand it correctly. In the event that assuming we had staff clinic as at the start of the period, I'm going to have my balance brought down at that point. After we do have that, I'm going now to consider the IBD. IBD will always be computed on the qualifying cost. Mark that very correctly. IBD will always be computed on the qualifying cost. So I should be having my staff clinic IBD, I should be having the 10% of the qualifying cost. So I'm going to have our figure there. Maybe a person will ask, Molim, what about balance carried down then? So for us to have the balance carried down, this is what you are going to do. For us to have the balance carried down, we are going to take the balance brought down as at the beginning of that period. And we deduct the IBD that we have charged for that period. So that as at the end of the day, my balance carried down here, I should be having my balance brought down minus the IBD that I have charged should give us what? The balance carried down. We are saying for us to achieve this balance carried down, I should be having my balance brought down. We deduct the IBD that we've charged for that period for us to arrive at the balance carried down. So the moment you mention like that, I'm going to consider all these assets, assuming that I'm dealing with a showroom or canteen. Talk of retail shop here. Assuming we do have a retail shop. Here. So talk of our retail shop. So if you're talking for a retail shop, remember retail shop will qualify for commercial building at the rate of 25%. So in this case, assuming you don't have the balance brought down. So for IBD, yes, I'll be having it at that point. But always recall, retail shop is under commercial building. So therefore, if I was to compute my IBD, we are going to take the 25% of the qualifying cost. 25% of the qualifying cost is what we are going to take as our IBD. And this is what we'll be having here. So that as at the end of the day, my balance carried down, I should be having it at that point. So our main concern was IBD. So if you're to compute IBD for that period, therefore, this is what you're going to have. The total figure, I should be having it at that point. That should give us our IBD for that period. So this, assuming this case, we are looking at the year 2018. So in the event that I'm continuing, probably if you're working out your books or if you're doing it for the purpose of exams and you noted you are given several years to compute the capital allowance for several years. So in such a case, if we are told assuming 2018 and 2019, so in this case we'll have done with 2018. Come to 2019, this is a concept that I want you to grasp very well. I'm going to deal with one asset. This one asset, at least, you should be very aware it should apply to all the other components. So we are dealing with labor quarters here. Assuming you are dealing with labor quarters at that point. So dealing with labor quarters, the qualifying cost, which you should mark that very well, my good students. The qualifying cost will not change. Mark that very well. Qualifying cost will not change. This will not change. But the balance broke down now because I'm in 2019. I had a carry down in 2018. We had the balance carried down in 2018. So come to this month, come to this year, my balance brought down should be the carried down. For 2018. So that in the event that we are computing IBD, the same procedure will apply. I should be having my 10% times the qualifying cost. That will not change. The 10% times the qualifying cost. So that as at the end of the day, this is what you are going to have, IBD. And in that case, my balance carried down, therefore, I'm going to take my balance brought down minus the IBD to give us our balance carried down. At that point. So that is how you're supposed to prepare your IBD schedule. In the event that you need to compute your total IBD, this is what you're supposed to do. So come this year, maybe assuming I'm having all the assets, so that at the end of the day, I'll just be totaling the total asset that we'll be having. And that is how you can compute your IBD. That is how you can compute your IBD. That's how you can compute your IBD. So the moment you're done with the IBD, now I'll want us to talk of WTA, the concept of wear and tear allowance. Remember, there was a change for WTA, which I believe probably not many students are aware of that, in regard to the percentage of a certain class in WTA, which we'll be looking at that right now. So, assuming you have any question, if you're watching us from Facebook right now, you can just ask your question on the comment button there. And if you have downloaded our application name is mdarasa, which can be downloadable from Play Store. If you go to Play Store, you just search mdarasa, you download the offline app. We'll be having, you create an account, and after you create an account, now you'll select the unit that you are interested in. And also remember, we normally have live classes which are conducted as per the timetable that you've also provided in our phone application. So in the event that probably you'll wish to take our classes, just download our phone application and you'll be getting all the updates in our phone application. So to this point, I'll want us to go to WTA unless anyone has a question. Let us check on the comment. Okay, I'm seeing a person is asking on the 10% rule. That is very good, which we are going to look at the 10% rule right now and the concept of the non-qualifying items and the concept of the non-qualifying items. That's one question that I'm seeing. We are going to handle it. Let us take other questions. Yeah, I'm seeing a lot of questions that you guys are asking, which is very okay. So maybe before we proceed to WTA, there's this person who is asking on the 10% rule. So after you've noted this component, after you've noted the component of the commercial building and industrial building, I'll want us to look at briefly the concept of the 10% rule. So for us to understand this concept of the 10% rule, let us take this question. Let us take this illustration question. Let us take this illustration question. So allow me to erase here. Allow me to erase here so that we understand the concept of the 10% rule, which, by the way, is very important, which is very, very important for you to grasp the concept of the 10% rule, to grasp the concept of the 10% rule. I believe as of now, we had tackled the concept of industrial, or rather investment deduction. And now you have a very clear understanding on the investment deduction. If you missed our previous class, of course, you can go to the video and go through it slowly by slowly, and you'll see what you had handled in regard to investment deductions. So looking at this concept of 10% rule, which you can have it as NB, talk of the 10% rule, which you can have it as our NB, to summarize the concept of IBD and ID at once. You can have it as NB. So the 10% rule normally applies to the components which are included in the factory building. The components which are included in the factory building. We are saying that the 10% rule will always apply to the components which are included in the factory building. Take, for example, like in this case, I want us to focus on a practical manner. Don't confine yourself just for passing your examination, because remember also this concept is also going to assist those accountants who are practicing. It's going to assist those accountants who are practicing and probably they had forgotten this knowledge. So looking at the 10% rule. So this is very important. 10% rule. 10% rule. Whenever we be talking with the 10% rule, at the back of your mind, what you should recall is that it will only affect the factory building. So in this case, it will only affect components of the factory building. It will only affect the component of the factory building. That is what you should note first of all. It will only affect the components of the factory building. And what are these components that will be affected? The components to be affected by the 10% test, we normally term them as non-qualifying items. We normally term them as non-qualifying items. So the components to be affected on this, we normally term them as non-qualifying items. Non-qualifying items in ID. Non-qualifying items in ID. Non-qualifying items in ID. So that in this event, I want us to take with an illustration question. You can be given a case whereby you are told that maybe I'm having an asset, rather I'm having the factory building. This factory building, it has included various components of the non-qualifying items that you are going to mention. Take, for example, we have the factory building. We have a factory building which costs, which had costed the cost of the factory building cost, the factory building cost, the factory building cost, assuming in this case, the factory building cost, assuming we have a figure of 10 million shillings. We have a figure of 10 million shillings. That's the factory building cost. Then you are told that included in the factory building, in that 10 million, it included the following. It included the following. Talk of warehouse. Assuming warehouse a figure of say like 1 million shillings. Talk of showroom, a figure of say like 500,000 shillings. Talk of admin block, on that case, maybe a figure of 2 million shillings, Remember, I'm writing this illustration so that you can understand the concept of 10% rule clearly. I'm having this illustration question so that you can understand the concept of 10% clearly. So I'm having admin block 2 million. We do have warehouse 1 million. Showroom I'm having 500,000. These costs were included in the factory building. That was note number one. Note number two, assuming you are told that probably they purchased assets such as maybe during the period the company purchased, say, water pump at 500 shillings, 500,000 shillings, and maybe generator, assuming at, say, like 100,000 shillings, That is what you have. So the examiner here wants you to compute the capital allowances required. You are told to compute what? The capital allowances required. You are told to compute capital allowances. Compute capital allowances. So given such a case, my good student, this is where we are going to find the concept of 10% rule coming in very clearly. This is where we are going to find the concept of 10% coming in very clearly. So this is what you are going to do. In this case, you are given the factory building. So allow me to erase here. So after we do have that, if we are required to compute the capital allowance, in this case, I need to filter in the non-qualifying. I need to filter out the non-qualifying items. At any given point, you never will be talking of non-qualifying items. Non-qualifying items number one. I want us to talk of non-qualifying items. Number one, non-qualifying items. Non-qualifying items. Remember, if you have a question and you are joining us on Facebook right now, you can just ask your question on the comment button. That is where I've gotten the question for the 10% for us to explain it well. So if you have a question and you're joining us right now, you can just put on the comment button there and we will assist you. This is public finance and taxation, the concept of capital allowance, which cuts across between ATD, Cifa Section 2, CPA Section 2, and for those students who are doing CPA Section 6, capital allowance is also applicable. So non-qualifying items, number one to note, we'll all be talking of admin block or office. Number two item for non-qualifying items, this admin block or offices. Number two, we'll be talking of a showroom. Number three, we will be talking of what is known as the retail shop. And number four, we'll be talking of a caretaker's dwelling place. Caretaker's dwelling place. Caretaker's dwelling place. So these are the non-qualifying items under ID. And the effect of the non-qualifying items, this is the effect, working out our question. The effect of the non-qualifying items, this is where I'll want you to concentrate very well and very clearly. And in the event that you have a question I've mentioned, just put on the comment button there and we are going to assist you accordingly. So working out the 10% test, in our question we've realized that the factory building, it has comprised of these components. Some of the components that we are terming them as non-qualifying items under ID. So I'm having the cost of warehouse, that is IBD item. I'm having the cost of the showroom. I'm having the cost of the admin block, which are included in the factory building. If you can recall, first thing first, factory building will qualify for investment deduction. Factory building will qualify for investment deduction. And as always, for us to determine the capital allowance, I need to come up with a qualifying cost. I need to come up with a qualifying cost. So it's always important that we should compute the qualifying cost, first of all, of the factory building, because we have noted it has comprised of several items. So that should take us straight to, we need to compute the qualifying cost. What is the qualifying cost of the factory building? The qualifying cost of the factory building. And this is where the 10% test will come in. The 10% test will come in. So, first of all, I need to identify the original cost of the factory building. The original cost of the factory building, you are seeing, we did have a figure of how much? 10 million. That was the original cost of the factory building. So, talk of cost of the factory building, cost of the factory building, I'm having a figure of 10 million. We do have a figure of 10 million. That's the cost of the factory building. But on this cost, I'm having several items which we've termed them as non-qualifying items, such as what? Showroom. So I'm given, on that case, I'm having non-qualifying items. Non-qualifying items. Non-qualifying items. Such as, number one, I'm seeing we do have what? Showroom. We do have showroom. We do have a showroom. Showroom, I'm given a figure of how much? Showroom, we have a figure of 500,000. So showroom, we have a figure of 500,000. Talk of admin block. Also, admin block, remember, is part of non-qualifying items. So I'm having admin block. Admin block, we do have a figure of how much? We do have a figure of 2 million. So we do have a figure of 2 million. So these are the cost of non-qualifying items that we do have. Probably a person will ask, Mwalimu, kwa nini hujaweka warehouse? Remember, warehouse is an IBD item. I'm going to show you how you are going to adjust the warehouse. How you are going to adjust the warehouse. So, determining the total of non-qualifying items. How much will you be having? Because I'm having the 500,000 and you do have the 2 million. So the total cost of the non-qualifying items here, the total cost of the non-qualifying items, I should be having a figure of 2.5. we should be having a figure of 2.5. Now, what is the percentage of the total cost of non-qualifying items to our entire cost of the factory building? What is the percentage of the total cost of non-qualifying items to our cost of factory building? So my cost of the factory building is 10 million. We are going to multiply by 100. That should give us what percentage? That should give us a figure of 2.5. We divide by 10 million. That should give us 25%. That should give us 25%. So in this case, this percentage of non-qualifying items, it is in excess of the 10% of the cost of the factory building. I want you to mark there very clearly. We are saying that the cost of these non-qualifying items, it is in excess of 10% of the entire cost of the factory building. And if it is in excess of the 10% of the cost of the entire factory building, therefore, they are not going to qualify for investment deduction under ID. So what we need to do is to deduct that cost. And the cost that you are going to deduct here is the entire cost of 2.5. Is the entire cost of 2.5. This cost here. So we are going to deduct them. So that is 2.5. We are going to deduct the 2.5 there. We are going to deduct the 2.5 there. We are going to deduct the 2.5. So that in this case, the cost minus non-qualifying items, I should be having the 10 million minus 2.5, which will give us a figure of 7.5, which will give us a figure of 7.5. So before we go to the warehouse, probably a good student will ask, mwalimu, kwa nini, or rather, mwalimu, what if probably nimepata 10% kamili, tutafanya aje? Will we include it in the cost ama tutaondoa? A good student might ask that question. And this is what I want you to get it clearly. Our main purpose of us determining the 10% of the cost of the building is for us to determine if these items are going to qualify for investment deductions or not. The basic reasoning behind that is that, the capital allowance, they are going to be taken as allowable expenses. And also in one way or the other, the government will want to collect the maximum tax that they can from the citizens. So in this case, we are deducting this component because these are commercial. And ID is granted at the rate of 100%. So in the event that we left them out, you'll find that our capital allowance will increase. And if our capital allowances are high, it means that the taxable income is going to reduce. And if the taxable income reduces, it means that the government might collect less tax as required. Because if you can recall on the sources of revenue sources of government revenue, tax is a main component. So that is why in this case, we normally do this because these are commercial. If you recall, and that's why I mentioned, we had to do the IBD first. Because recall, showroom and admin block, they will qualify for IBD. But I'm going to give you another concept that you should always keep it in mind also. So, in the event that you are getting, assuming that in this case, the cost of the showroom and admin block, assuming it was 1 million. That is an assumption that you are taking. So that I'm having times 10 over 10 million times 100. That should give us exactly 10%. If we had a figure or the percentage of the non-qualifying items would have been 10%. If the percentage of the entire non-qualifying items would have been 10%, what would you have done? In this case, you would have assumed this figure, meaning that the 1 million will be included in the cost of the building. We are saying that in this case, allow me to erase here, but mark the concept, our percentage is 25%, but we've just taken an assumption. We are just taking an assumption for you to get it well. We've mentioned that assuming that our cost was 1 million. In this case, you'll find that our percentage will have been 10%. And if our percentage will have been 10%, assuming that 10% will have been here, meaning that here I won't be having anything. So that at that point, our cost will just remain to be 10 million. Our cost will just remain to be 10 million. Or if it was 9%, this cost will not have deducted the cost of non-qualifying items here. It will have just remained to be exactly the same. We have deducted the 2.5 because we've realized that the cost of non-qualifying items are exceeding the 10% of the cost. The 10% of the cost. So in this case, being 10% and below is not going to be deducted. More than 10%, 10.1% and above, in such a case, you'll have deducted that, or you're supposed to deduct it. So I'm going to leave it at that point, assuming you've gotten the concept well. Here, we are talking of 2.5. We had gotten the figure for 2.5, so I'm having a figure for 2.5 here. This is a 2.5 that we do have, and we got a figure of roughly like 7.5. That is a figure that I believe we had gotten, 7.5. So now, on the same case, my good students, what have you realized? On this cost, we had warehouse. Warehouse, you know very well, is not an ID item. It's an IBD item as we had mentioned. So, being warehouse, not a warehouse of 1 million. That figure is not an ID item. So, what you're supposed to do, also you're supposed to deduct warehouse. You're supposed to deduct warehouse, a figure of 1 million. So that after deducting that warehouse, a figure of 1 million, now the qualifying cost for factory building, I should be having a figure of 6.5. I should be having a figure of 6.5. So this will have been the qualifying cost of the factory building. And that's how the concept of 10% normally applies. So this is what we'll be having. The qualifying cost of the factory building. The examiner here wanted us to compute capital allowance. So whenever you are told to compute the capital allowance, mark this very well. If possible, have it on a red pen. If possible, have it on a red pen. I know I'm on a dark. Let us do something. Just a moment. Okay, sorry for that. So we are saying that, as I was saying, in the event that you are told to compute the capital allowance, this cost here, the two costs of showroom and admin block, in the event that they were included in the factory building and they haven't qualified for ID at that point, you are not going to take them anywhere else. You are not going to provide IBD on that. If they have not qualified here, you are going to leave them just the way they are. You are not going to provide IBD. I repeat again. In the event that these costs are included in the factory building, you have determined the 10% test and you've realized they not qualify for ID at that point of the factory building. You are not going to compute the IBD on them. You are going to leave them just there. You're not going to compute any other capital allowance. Mark that very well. So computation of our capital allowance, our main concern is ID. And working out ID, this is what we are going to have. So I should be having my qualifying cost. So I'm having my nature. We do have nature of the asset. we do have qualifying cost, and we do have ID. And we do have ID. So, noting that one, talk of the nature of the asset. In this case, we determine our factory building. So my factory building, term it as FB. My factory building cost is 6.5. So that should be the qualifying cost. The cost that is going to qualify for ID. ID, you know very well, is at the rate of 100%. So therefore, you should just be having the 6.5 at that point. The other cost here, I'm seeing I'm having water pump. So I should be having my water pump. The cost is 500,000. Talk of ID at 100%, 500,000. What about generator? So I'm having generator here. So for generator, the same case will apply. The cost is 100,000. Being 100,000, I should be having 100,000. So the total ID at that point, I should be having 6.5 plus 500,000 plus 100,000, which will give us 7.1. Which will give us 7.1. So therefore, I should be having 7.1. I should be having 7.1 being our ID for that period. Being our ID for that period. So my good students, that is what you're supposed to work out, or rather that's the main concept behind ID. That's the main concept behind the aspect of the 10% test. I believe the person who had asked that question has been answered. I believe the person who had asked that question has been answered. So clearing this, I want us to go to WTA. Unless anyone has a question, you can check if anyone else has a question so that we assist. That is very good. So I believe he has been answered. So let us proceed to WTA. Let us proceed to WTA so that you have this concept clearly. Let us proceed to WTA. So that will mark the end of our IBD and ID concept. So proceeding to WTA. Proceeding to WTA. Proceeding to WTA. Quickly, we can look at WTA. So now, working out WTA. And remember, for those who are joining us, you are doing a public finance and taxation. That is a capital allowance concept. This concept cut across between ATD, CPA, Section 6 and Section 2, and also Cifa. Students of Section 2 are doing Cifa. So it is very important, and you can invite your fellow friends and probably colleagues who are doing a public finance and taxation. You can always download our phone application from Play Store, mdarasa, and you can get more of these videos in our phone application on the same case. So we are saying that today, or rather continuation of that, we've talked of IBD, we've talked of ID. Now in our session today, I want us to talk of wear and tear allowance, WTA. WTA. Wear and tear allowance. Wear and tear allowance. You know, like there are some has been, we have some amendments in regard to WTA, some which were implemented last year, some which are just changed in regard to the amendment that was done just the other time. So, for the purpose of exams, we are going to handle it in two cases. For the purpose of exams and for the purpose of preparing our books. So first of all, I'm going to handle it because it is for the purpose of us doing our examinations. I'm going to handle it in regard to our examination. And also on the practical part of it, we're also going to look at it very clearly and assist those students probably who are doing, who are practicing accounting. And in that event, they want to prepare their PPE schedule, that is a property, plant and equipment schedule, for the purpose of their books to be audited or for the purpose of them to prepare the draft accounts. So, looking at WTA, first of all, whenever you're talking of WTA, I remember some in my class, whenever I ask WTA, some students normally tell me in full that hiyo ni inamaanisha nini wear and tear allowance, which is very correct. But the question is, wear and tear allowance is in full. If you're asked the definition of WTA, what are you going to mention? What are you going to say? Definition of WTA. So WTA is very interesting. because it has cut across, or rather it has a lot of assets that normally surround us. And also we can do a brainstorming in regard to this changing environment. Technology is changing a lot. There are some assets that are coming in. Where are we supposed to put such assets? And why is it that such assets have not yet been provided under the tax laws? These are some of the cases that we should be very familiar with. We should be looking at it. That's why I mentioned tax is always a practical unit. So long as you approach it with an open mind, you'll find that it is so interesting, because you're dealing with things that surround us. So in this class of ours, we're also going to do a brainstorming in the event that with this technology that is really changing a lot. There are some assets that are coming, probably they weren't provided in the Tax Act initially. As of now, how are we going to deal with them? You as accountants, where are you supposed to put such assets? This is what you're going to look at. So talk of WTA. WTA, these are deductions granted to investors in all other assets, or on all other assets which are not under IBD or ID. We are talking of WTA. These are deductions granted to investors on all other assets which are not under either ID or IBD, So WTA is usually categorized into 4 classes. Name and 1 special class. So you're saying that whenever you're talking of WTA, is categorized into these classes. WTA is categorized into classes of WTA. Looking at classes of WTA, they are categorized into 4 main and 1 special class. So classes of WTA, normally talk of class 1 items, usually at the rate of 37.5%. Talk of class 2 items, usually at the rate of 30%. Talk of class 3 items, usually at the rate of 25%. And talk of class 4 items, usually at the rate of 12.5%. And of course, we normally talk of special class. We normally talk of a special class, which is usually at the rate of 20%. So basically, whenever we be talking of wear and tear allowance, my good students, always try to recall all these classes. As much as is normally being provided in your tax paper for the purpose of exam, it's also very ideal to know that in the event that probably I'm given this asset, where will it fall? We are going to look at the characteristics of each item, and in such a case, it's going to assist us. Where are we going to put it, or which class are we going to categorize it? So looking at the main areas, let us go straight and look at the characteristics of these classes. So talk of the characteristics of classes, WTA classes. So talk of characteristics of these classes. So looking at the characteristics of class 1, class 2, class 3 items, this is what I want us to talk about. Characteristics, we start with class 1 item. So starting with class 1 item, so we have class 1. We say this is at the rate of 37.5%. So what are the characteristics of class 1 item that we should always be having? What are the characteristics of the class 1 item that you must always keep in mind? So that should take us to characteristics. Characteristics of class 1 item. So class 1 item, this is what you should always recall. At any given point you are dealing with assets under class 1. Always know that these are assets which are heavy earth moving, machineries and equipments, heavy earth-moving machineries and equipments. Number one. Number two, they should be more than 3 tons. They should be more than 3 tons. So these are the main characteristics of class 1 item. First thing first, they are heavy at moving machineries and equipments. And also, they are more than 3 tons. They are more than 3 tons. Examples of such classes. Talk of examples. Examples. We normally have a lot. We normally have so many examples in regard to that, which will include talk of tractor, for example. I'm not going to write all of them. I'm just going to mention some of them. So talk of tractors being our number one element. We can talk of mobile cranes. We can talk of mobile cranes. We can also talk of, say, pickup more than 3 tons. Pickups more than 3 tons. More than 3 tons. More than 3 tons. We can talk of the caterpillars. Caterpillars. And so many other assets, under class 1, which of course the notes we've also provided it in our phone application. And purely, by the way, the class notes in our phone applications are purely for free. You can go to the phone application Mdarasa and you can get all these class notes purely for free, for the purpose of also us assisting you guys during this time that most of you are studying from home. We've gone ahead and provided the class notes in our phone application totally for free. Totally for free. So we've given more examples in the class notes that we provided in our phone application, which you can go through them. Now, talk of class 2 items. Talk of class 2. Talk of our class 2. Talk of our class 2 items. Class 2 at the rate of 30%. At the rate of 30%. So, talking of class 2, what are the main characteristics that you should have in mind? X-ticks of class 2. What are the main characteristics that you should be having in mind for class 2? Class 2, key element that you should never forget. The key element for class 2 item that you should never forget. You must always have it in mind. We normally talk of, they should be office, electronic equipments. Office electronic equipments. Office electronic equipments. Mark that word. Electronics equipment. Office electronic equipments are what you are going to take under class 2. Under class 2. And in this case, after looking at the characteristics, now I believe some of us can try to internalize some of the examples that you could be having. We normally have a lot of examples under this class. We normally have a lot of examples under this class. So talk of examples. Examples under this class, we normally talk of, number one, we normally talk of computers. We normally talk of cash registers. We normally talk of ATR machines. We normally talk of photocopiers. We normally talk of scanners. All these are examples of class 2 items. I've mentioned we have computers, we have scanners, we have photocopiers, we have the aspect of cash registers, we have ATR machines and all that. Now, maybe I'll just pose a question for you guys. Asking just for the purpose of you internalizing it very well. With this technology, a lot of people are using Wi-Fi. Probably even you at home right now or wherever you are, if it's in your office, you're using Wi-Fi. And these Wi-Fis, they normally have routers. So if I may ask, where do you think these routers will fall? Which class? The internet routers, where will they fall? Under which class? That is a question for you to answer. Yeah, that's a question for you to answer. We normally have drones. We normally have drones. Drones, actually, they are nowadays everywhere. There are those people who are using drones for the purpose of taking cameras. There are those who are using drones for the purpose of maybe transporting goods and all that. A good question would be, these drones, which class of capital allowance will they fall? These are some of the questions that you need to ask yourself. These are some of the questions that you need to ask yourselves. So I really wish that in the event that probably you've gotten an answer, you can always WhatsApp us on 0708068851. In the event that you have an answer and you know your answer is very correct, always try to WhatsApp us on 0708068851 for us to engage also in that practical area, for us to engage in a practical area. So these are some of the class 2 elements characteristics. Now talk of class 3. Class 3 is much wider because of the concept of commercial and non-commercial vehicle, which you are going to look at it. Probably even if it's not for this class, but we are going to look at it. So talk of class 3. Class 3 we mentioned at the rate of 30%. We mentioned at the rate of 30%. So looking at this case, the same case you should understand are the characteristics. What are the characteristics of class 3 items? What are the characteristics of class 3 items? We normally term them as light earth moving machineries and equipments. 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 That is number one. Number two, we normally term them as they should be self-propelling. And characteristic number three, they should be less than 3 tons. Less than 3 tons. These are the characteristics of class 3 items. These are the characteristics of class 3 items. So we mentioned they should be light earth moving machineries and equipment, self-propelling, and also less than 3 tons. So talk of examples. Examples of class 3 items. What are some of these examples? We normally talk of motor vehicles. And whenever you're talking of motor vehicles, 2 things should ring at the back of your mind. You normally have non-commercial and commercial vehicle. You're going to elaborate on that later on. Of course, you normally talk of aircrafts. Also aircrafts, I know this could be new for some of us. Aircrafts will also fall under class 3 by the virtue of its characteristic, self-propelling. We normally also talk of tuk-tuks. Tuk-tuks will also fall under class 3. We normally talk of motorcycles. Motorcycles will also fall under class 3. Then also in this class, I have a question. Today, with this technology of ours, we normally have bicycles. These bicycles, they do have a motor. At times, if the motor is fully charged, they can just self-propel themselves. Probably when the motor goes down is when a person will start cycling the bicycle. But the question would be, where do you think this bicycle will fall? It is a bicycle and it has a motor. This motor will enable it to self-propel. Currently, bicycles are taken under class 4. But the question would be, for these bicycles which have motors, which class are they going to be taken? That's the question that you should ask yourselves. So I've asked the question of the bicycles with motors. I've asked drones. I've asked the aspect of routers and all these elements. Where are we going to take such? Because for Wi-Fi, remember we have the portable routers and also you have the fixed routers. For bicycles, these which are using motors, at times they can self-propel themselves. So where are you going to take such assets? So in the event that you know you have a clear answer, you can WhatsApp us on 0708068851 for us to engage in this discussion. So class 3 item is very wide. We have the component of commercial and commercial vehicle. So in our next class, my good students, we are going to clear class 3 and also talk about class 4 and also go ahead and look at special class. We were supposed to do a question from November 2019, question number 4, but because of this time, I believe we can do it in our next class. November 2019, question number 4 is a question that we are going to handle that was tested for capital allowance. So to this juncture, maybe we can stop our class from now, but always remember, you can get more of these videos in our phone application, which is downloadable from Play Store. If you go to Play Store, you search Mdarasa, download Mdarasa app, you can get all this content. As I've said, we have provided free class notes and also free revision question and answers, which you can study at any given point in time. And also, you can go and subscribe to some of the videos that we have in the event that you really need these videos, of which I believe you do. And also, you normally have live classes, as I've mentioned. Live classes are as per the timetable that we have provided. So thank you so much for having this class with me. I really do appreciate it. And let us meet in the next class where we are going to clear capital allowances. Thank you so much. Remember to share with your friends and also remember to download our phone application. Thank you so much and may you be blessed.